Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, October 16th, 2015. First of all, I wanted to extend my special thank you to all of those who have already signed up for my trade alert services. I am really floored at the amount of interest and that I'm getting right now from the subscribers. This really means a lot to me. I will do my very best not to disappoint with my calls. Also, I just want to let others here know that many other services that provide recommendations of what to buy and sell, but themselves don't take positions in the securities that they recommend. With my trade alert services, that's not simply buy and sell recommendations, but I actually take positions myself. So my money is on the line along with yours. All right, let's move on to the actual markets. And I was looking over some charts today, and I found some pretty striking similarities between charts of the New York Stock Exchange Composite from 2008, when the bear market started, and today. We'll also look at breadth of the stock market. It has improved, but still falls somewhat short of the bullish thresholds. Bonds again outperformed stocks this week, even despite a pretty strong gain in stocks. We'll look at dollar, which may have held support. And of course, if dollar rallies from here, this will weigh on gold, oil, and natural gas, the commodities. All right, so let's look at NYA, New York Stock Composite Index. This is from 2008, and I just looking at this chart, it kind of has very similar pattern to what we're having right now. So during 2008, we had a major support break. First, we had a new all-time high right here in October of 2007, meandered sideways, and then broke down conclusively here in January. There was a pretty strong rebound, and then a rebound, and it continued here above the 50-day exponential moving average. Notice this 50-day EMA crossed below this dotted green line, which is a 200-day EMA. So one of the ways to tell this is a bearish security now is to simply look at this bearish cross. Now, I wanted to point out this indicator, which is New York Stock Exchange Composite Breadth Momentum Oscillator, and this is a one of the versions, well, a different version of McClellan oscillator. So it's a breadth oscillator. Anyway, so you can see that we had a breakdown in this oscillator, and it was in negative territory, and it continued to be negative throughout this, breakdown, and then a rebound. And then finally it became positive here. And actually stayed positive here until this moment, which was February 26, 2008. Then what happened after? So notice that this is the first time this ITBM became positive. So let's see what happened afterwards. I'm just going to forward a couple of days forward. All right, here we go. So you can see that it crossed below its 10-day exponential moving average, and then we had basically a retest of this low. Continued. Let me see. Advance a couple more days. Yeah, so this is a retest of this low. Afterwards, there was a rally here. But the interesting part is, let me go now to today. Notice it's very similar. You had a major breakdown. We had hit an all-time high here. We had a major breakdown, and then we had a rebound. Now ITBM is in a positive territory for the first time, just like in 2008. So this is an oscillator, and it oscillates between positive negative territory. So eventually, I don't know exactly when, of course, but it will roll over. And I think that if it rolls over soon we will most likely get a retest again of this September lows. So as far as market breadth, so this is percentage of stocks above 200-day exponential moving average. Notice that it dropped below 40% here in August. Same with the bullish percent index for a New York Stock Exchange Composite, also dropped below 40%, and so far never really recovered. It's still below the 60% bullish threshold. Let me go back now to 2008, and you can see the similar picture. Really, we had breakdown in the percentage of stocks above the 200-day moving average and the bullish percent index, and it never really recovered. And let me fast forward even more now, and I'll show that that was actually a good signal. Notice that percentage of stocks never really crossed above 60, and it kind of came close here for bullish percent index, but it never did. So even after this huge rally, after the low that I showed just a few minutes ago, this was still a bear market rally. So in other words, this would have been just an excellent shorting opportunity, and here further on, there was a further breakdown of the price. You can see there was a further breakdown of the price. So let me go back now to today. Is this what's going to happen? I have no idea, but the similarities are very interesting, and I think it should be noted by the stock bulls that we're now in overbought territory on multiple indicators, while the security itself is downtrending. And this is usually a recipe for another leg lower. All right, now let's look at S&P 500 ETF SPY, which is basically a proxy for the stock market. Just as I showed with New York Stock Exchange Composite, the actual chart itself is very similar. It has this dominant feature is still this breakdown. And right now we're basically at this level. We're retesting this breakdown. Like I mentioned before, I still think that we are. I'm still treating S&P 500 as bearish security. For many reasons, this is a death cross right here. We had a breakdown in advanced decline on balanced volume. We had advanced decline line breakdown, advanced decline volume breakdown, etc. Now, as before, I just showed with this ITBM, Breadth Momentum Oscillator, this is the first time we're in positive territory and strongly positive territory since this breakdown. So, as before, that's an oscillator and it tends to oscillate. So there's a distinct possibility it might oscillate to the negative side, and we may get again a retest of this low, possibly this low. If we take out this low from August 24th, we could continue lower. In other words, we'll be in a bear market. Now, since this is a bearish security, I'm looking for a overbought conditions within a bigger downtrend, and for me, this would be a good shorting opportunity to go short. So as far as market breadths, it did improve. This is a percentage of stocks, new highs, new lows indicator. We did hit plus 5%, and we yet to hit minus 5%. So this is a positive indication. With the advanced decline line, we have not yet recaptured the highs from here, which is understandable. So sometimes the advanced decline line would actually lead the indicator higher. So I'm not seeing it. I don't see a divergence either, but as I said, I'm still treating this as a bearish security. Let's look at S&P 500 from a slightly longer perspective. This is the 11 months chart. Similar thing. This is actual index, SPX. Pretty powerful rally. I'm not gonna deny this. If you bought here at 1860 and you're up here, that's excellent. I'm not definitely not chasing the prices up here on the long side. As far as market breadth, so this is a stocks percent above 200, above 50, and above 20 EMA. You can see that the percentage of stocks above the 200 EMA has not yet crossed into the 60% threshold category, into the 60%, about 60%. The 50% did cross. So that's like a baby step. And 20-day EMA, percentage of stocks above 20-day EMA is very volatile, so it's more of a timing indicator, and it's certainly overbought at this point. And very good indicator, in my opinion, is the bullish percent index. So this is a percentage of stocks within the index on the point and figure chart buy signal. And again, it crossed below the 40% mark, but it has yet to cross above 60. We're close, we're 52. If we get more follow through for the price, we might actually get there. We did manage to close above the 200-day EMA, so that's a positive sign. You can see that as a positive sign. So, but I don't know. There's just like a lot of resistance here now in this 240, 250 area. From this breakdown, we're basically testing a breakdown, and if we fail here, that's not a good sign. Okay, let's look at TLT bonds as my proxy for TLT. I think this is a bullish chart. I think that bonds are in a long-term uptrend, and I'm looking for buying opportunities. The interesting feature here is this two inside days in a row here. So you can see this big white candlestick, and then the other two candlesticks are entirely within the range of this white candlestick. So that's kind of like a compression of the price, kind of like a triangle consolidation. And since this is a uptrending security, this could be like a prelude to a bounce higher, to challenge this high and possibly even this high. The interesting thing about bonds is that for the week, actually bonds outperformed stocks. They gained more than the stocks did, even considering S&P 500 really put on pretty stellar performance. Bonds still put on a better performance, and that's probably because the people are still feeling that there is quite a bit of risk and fear in the market. And it looks like Fed is not going to raise the rates anytime soon, so bonds are still pretty attractive. Okay. And next, let's look at the dollar index, and this is a dollar index as traded on Forex exchange. This is a CFD as traded in Europe, especially. Uh, Anyways, you can see that this is a 200-day moving average. This red line is a 50-day moving average. So it's still, pretty bullish still. One is above the other, and this is not a high, but it's very close to a 52-week high. 52-week high, I think it's somewhere here. Um, the, last week I mentioned that we were basically selling off pretty hard all last week, and um, we had like kind of like, I think this is a selling climax right here, and then next day we held support, and then today on Friday we actually rebounded in the dollar index. This rebound is putting pressure on all kinds of commodities, obviously, and we'll look at commodities next. But for now, I think this level may have held. Uh, and if we continue higher and maybe even take out this high, then we are certainly still in a bullish uptrend for the US dollar. If this is indeed the case, then when we look at gold next, gold will come under, most likely will come under further selling pressure. So let me just move over this chart a little bit. Okay, so this is a chart of gold daily and daily data scale rather. So gold bulls really had a pretty good week. This is about 2% gain for the week. This could be a breakout, possibly, where price moved above the 200-day moving average and actually stayed there for a couple of days. However, you can see here we had a very similar situation. We had a breakout. Price actually stayed about 200-day moving average for a few days and then collapsed, and we got that. Are we gonna get something similar? I don't know, but gold is still in a bear market, and this is a counter trend bounce. For now, a bear market rally, if you will. For this to become a bullish security, what I would like to see is a continuation higher, and then a pullback, and then it should hold on that pullback. It should hold there. Then at that point, most likely the 50-day moving average will catch up with the 200 and it will cross above it. At that point, that would be like a very high indication that this is now gold is now in a bull market. Until then, I'm really treating this as a bearish security and will continue to look for shorting opportunities. Now let me show you a couple of interesting points here. You can see that we made a series of higher lows, which bulls would love to see. But interestingly enough, on balance volume, it was trending lower. So it seems that there's really not much volume behind this move. Now we're of course overbought at this point, so I would not be surprised if we roll over and not hold this support. Like right here we have a breakout, so this support is supposed to be now after the breakout, the resistance becomes support. I would like to see at the very least this support hold in the 1160 area. Okay, let's move on to GDX, the gold miners ETF. Surprisingly, gold miners actually performed worse than gold. They for the week, GDX only gained 0.75%, while gold actually gained over 2%, I believe. So, well, gold miners are quite volatile, of course, and first of all, gold miners are together with gold are really in a bear market. This is all 52-week lows. So 52-week lows are very much bearish. Similar to gold, we had what gold bulls would like to say is a breakout, at the very least above this intermediate high from August. But as I said before, long-term GDX is very much still in a bear market, so I would not be surprised short sellers step in here and just push the prices lower. I'll show next today's action, Friday's action is very interesting. You can see the price is actually closed very close to the close, and this is not a good sign for gold bulls. In other words, there was very little buying pressure by the end of the day. As far as market breadths, you can see a divergence taking shape right here. We had lower lows in advanced decline lines, but we had a higher high in the price. So this is a divergence, and as I said before, this is the bearish security. So a bearish divergence would not be a good sign unless you're a gold bear like me currently, not perma bear. Now there is some positives on this chart. So on balance, volume is actually trending higher, so it shows some accumulation. That's definitely a positive sign. And also bullish percent index was very oversold here at 0, and then it rebounded, and now we're 40%. Now, as I mentioned before, for S&P 500 and the New York Stock Exchange Composite, my threshold for bullish is a close above 60% for bullish percent index, and then it has to hold there. We have not been there just yet. Again, this is a MACD. It's in a positive territory, so I think it's overbought basically at this point again. And if gold rolls over, GDX will likely follow. So let me show next a chart of GDX. This is a 5-minute chart, and I want to point out that in the future I'll be doing some more videos for the members only section. I already have a couple of videos for members only section that people can watch, but this one is a very interesting concept, and I probably will do a video just some specific market timing. This is an opening range concept. So opening range is a first 30 minutes of trading, and whichever way the range breaks, whichever way the closes above or below this opening range, that's the bullish or bearish bias for that particular day. You can see this is very interesting that the opening range was right here. So at this point there was no bias. The price attempted to rally and failed, but here it was a clear breakdown with a close below the opening range, and the price just never recovered and continued to push lower. And you can see that at the very last minute of the day, 5 minutes, this is a 5-minute chart by the way, price really was at the very low of the day. So that's not a good sign for gold bulls. Next, let's look at oil, West Texas Intermediate crude oil daily chart. So, okay, first of all, bearish security, downtrending security. We had a counter trend bounce after hitting a multi-year low here at $37 in late August, and this is a three white soldiers pattern, three big white candlesticks, and what appears to be a flag. I actually draw it in. Now here in October, beginning October, we had what I thought was a breakout, what many people thought was a breakout, and then it actually continued higher, but the price was actually rejected at the 200-day moving average with a shooting star candlestick. And this I think was last Friday. Next day there was a clear follow through with a big red candlestick, and the price continued lower until it almost hit the 50-day moving average with this red line, and then price rebounded. So for now, neither the bulls nor the bears clearly dominate the action. I still think this is a bearish security, so I'm more keen to short this than to go long. And finally, briefly, let's look at natural gas daily spot price. So again, also bearish security, long-term bearish, so I was looking for shorting opportunities. I think I shorted somewhere around here. And this was actually before I opened the trade alert services. I think I shorted somewhere around here, and I had, I usually have three targets for my shorts and for my longs, and two of my targets have already been hit. And now this is a very interesting pattern here. We hit a multi-year low here in the beginning of October, and then rebounded with this rising wedge pattern. This is a very classic pattern. Following a strong breakdown, there is a rising wedge pattern, and then if there is a breakdown, this would be like a bearish continuation pattern. Since this is a downtrending security, this rising wedge is a bearish continuation pattern, and looks like we got this bearish continuation already. So I'm pretty much thinking that we're gonna get more 52-week lows in the days and weeks to come. All right, let me briefly show you how to find us on the internet. Go to MasterChartsTrading.com. We have it, as you may have heard, have trade alert services that are active. You can sign up here. Also, if you sign up for a mailing list, you will get a special price for the trade alert services. We have a blog and video section where this video will be posted. We also have a public charts and social page, and there is you can click on this public chart link and find some of the charts that are mentioned in this video there. Sign up for our mailing list, as I said, and also you can find us on Twitter, Facebook, YouTube, and StockTwits if you have those accounts. Thanks for watching, and have another great trading week. Bye-bye.